Adobe, software company known for creative, document, and digital experience solutions, recently announced its fourth quarter financial results. Stock price has been in a serious decline over the 2 years, depreciating more than 40% from its highs. Let's take a look at the business itself to see what's going on with Adobe. Most of Adobe's revenue comes from subscription-based business model. Company operates in three segments. Digital media, which is the largest of the three and represents 75% of total revenue, centered on content creation and document management tools like Photoshop and Acrobat. Digital experience provides data-driven marketing and analytics solutions. Segment represents 24% of total revenues. Publishing and advertisement segment, very small in terms of revenue and declining each year as Adobe shifts its focus on cloud-based offerings. Adobe's customer base is very diverse. No single customer is responsible for 10 or more percent of total revenue. For the past 10 years, annual revenue has been growing steadily, and currently it stands at $23.8 billion. Operating profit has also been growing, and currently the margin stands at 36.6%. We can see that last year Adobe experienced a decline in operating profit. This was caused by a failed acquisition of Figma company. Acquisition deal was cancelled and Adobe had to pay a fine of $1 billion, which increased its operating expenses that year. We can definitely say that's a one-off expense. In the current year, Adobe earned $7.1 billion net profit on 23.7 billion revenues, which accounts to 30% net profit margin. Same as the profits, free cash flow is also at all-time highs, closing in on 10 billion. Free cash flow margin is 41.5%. So far, so good. Revenue is constantly growing every year. Profitability is high, free cash flow is plentiful. Let's take a look at the free cash flow allocation for Adobe. Management has never paid dividends, but is going strong on share buybacks. 5 to 10 years ago, they used to allocate around half of free cash flow for share buybacks. But now, as the stock price is declining, they allocate more than 100% of free cash flow to repurchase the shares from the market. They even increasing the total debt. If one believes that Adobe's stock value is higher than its price, this is a great return for shareholders. And we can see that available shares outstanding declined from 506 million 10 years ago to 417 million available right now. Adobe operates in one of the most competitive industries there are. Notable competitors include Microsoft, Apple, Oracle, SAP, Salesforce, Anydesk. However, it seems that market's major concern here is OpenAI with its ChatGPT product, and there are many others. If users will generate content like images with large language models, Adobe's products may become irrelevant. But nothing is black or white. ChatGPT was launched 3 years ago and Adobe is still here, growing its revenue. Moreover, it just announced collaboration with OpenAI as Adobe will integrate its models into ChatGPT to find additional ways to reach broader audience and stay relevant in the game. Also, if Adobe collaborated with OpenAI, how the future of competitors like Canva look like? There are many ways the situation can unfold and time will tell. Meanwhile, company is financially strong. For example, even if its debt-to-equity ratio is 57%, Adobe could repay all of its debt with only 1 year's net profit. Operating profit also covers annual interest expense 33 times. Based on the current business trends, my estimation for the value of Adobe stock is north of $500 per share. And if market sentiment changes, stock price has the potential to go way higher than 500 to be at least comparable with competition valuations. Of course, market could be right and Adobe could go out of business, but I want to see indications of that. So far, I don't. I give Adobe stock a bullish rating as I believe that the company is undervalued and offers quite large margin of safety. If you have something to add, I would like to see your thoughts in the comments section below. Thank you for watching. If you found this analysis useful and if you're looking for more investment ideas, subscribe to my channel. I'm Aurimas and these were my insights. Stay curious, stay disciplined, and may our returns be strong.